Welcome to Wall Street Apprentice. This is Thursday, December 27th, 2012, and this is the intraday market review. Okay. Um, there's a lot of panic selling in today's markets. We are 20 points below the morning highs after Senator Reid came with the little news on CNBC that he believes that we're gonna go over the fiscal cliff. Okay. Um, just be careful on shorting the markets, shorting the news. Okay, a lot of this is already evaluated inside the markets. So just be careful on shorting the markets with this unexpected news. Okay. One thing to keep in mind that we are trending on high volume. Okay, so we went down on high volume, and we're breaking lower lows on every single wave. Okay, so it's very bearish. Um, but again, we have to be able to understand the overall trend inside the markets. Okay, we're in an uptrend, making higher highs, higher lows, higher highs, higher lows. Okay, we're making lower highs here, so just be careful. Okay, but confirmation will come below the 1377 level. Okay, 1377 level. Okay, 1377. A lot of people don't have the S&P futures. Okay, so I'm going to discuss the SPY, an ETF that follows the SP 500. Okay. Um, Again, the key level to watch in the SPY is the 138, 137. Okay, 138 level. Okay, this is the level. This and below this level with confirmation should be on high volume. Should give us the key to short the markets. But at the moment, we are on a bull trend, so just be careful on every trade you make. Okay. Um, One thing that I want to discuss is going to be the dollar and the euro. Remember, the dollar is the most important chart you are going to follow. Okay. The higher the dollar, the lower the markets. The lower the dollar, the higher the markets. Okay. So vice versa. They're negatively correlated. Okay. Um, Now, first let's study the euro pair before we go into the dollar. Okay, um, we are we are very bullish on the euro. Okay, looking at the 1 hour chart, we have a bull flag forming here. Okay, bull flag forming, but we are not confirming to the third wave until we go above the 1.3307 level. Okay, if we can confirm above this level on high volume, we can see third the third wave form. Okay. A short entry comes inside below the 1.3129 level. Okay. 1.3192 level, it's your key entry to short. Okay, we'll cancel the second wave down here. Okay, remember, second wave down here, which will make this into a bearish pattern. Okay, so just be careful. It's the holiday season, so there's not a lot of volume going on. Okay, so keep that in mind, and just be careful going long because we have a lot of uncertainty because of the fiscal cliff, which is coming in the next few days. Okay. Um, let's look at the dollar chart, at the 1 hour dollar chart. Okay. We are rising on cumulative higher volume than the bearish trend volume. Okay. We are rising on cumulative volume higher on a higher trend. Okay, so it's very bullish. Okay. It's very bullish. We hit that support line at 79.065. Sorry for that. Um, so we're holding the support. We have to see if we can break above the 80.54 level for we have a bullish pattern on the dollar. But so far there's no confirmation. There's nothing to be assured. But we are above the 79.595 level. Okay, so we are bullish in the short-term basis, so which will negatively affect the euro. Remember that. A few stocks that I want to discuss beyond the overall markets that they look like a profitable trades for swing trading and for trading themselves is CSWC, the Smith Wilson Holding Corporation. This company is fundamentally very strong. Okay, I prefer this company over RGR, which I'm going to discuss a few key statistics right now. Okay, Um, after the news that happened in Connecticut, the markets trended down. Okay, the market started trending down, but on low volume. Okay, we have high volume over 20 million. Okay, on this support line of 7.96. Okay, so there's a lot of institution playing on this low market cap. Remember, Smith Fulton is about a $500 million cap company. Okay, now fundamentally speaking, it's a stronger stock than RGR with just simple statistics. Okay, um, remember the three things that you should always look at is return to equity, price to earnings, okay, and market cap. Okay, market cap of the whole entire company, which is would be at 535.13 million. Okay, so it's a low market cap company. It has a great PE ratio compared to similar stocks in similar competitors from its sector, and it's overall cheap compared to the overall markets. And it has a return on equity of 46.51% on high volume. Fundamentally, this company is strong, so keep that in mind. And technically speaking, we are looking at the high institution buying. Okay. The other competitor is RGR. Okay, different companies in how they work. Okay, so just keep that in mind. It has a smaller return to equity than HWC at 40.32%. Has a higher price to earnings, which means it's a little bit more expensive than HWC. Okay, and its price to book is at 4.728, which is expensive for a regular company, but it pays a good dividend yield of 3.39%. Okay, so just keep knowing that HWC is fundamentally stronger than RGR. Okay, now they both trend the same way. Okay, so whatever affects one will affect the other. So always keep that in mind as well. And just watch these companies very carefully. We should see a nice uptrend in the next few days. Okay, as long as we keep above in HWC would be above 7.9 will be great. Okay, below the 7.9, just be very careful because there will be a lot of selling, a lot of panic selling. We break that support level. Um, Again, RGR is the same chart. We're bullish, lower return to equity than HWC, but it's much. We have a higher volume consensus, and we're breaking higher lows, higher highs, and higher lows. Okay, so just keep that in mind. As long as we stay above the 41.37 level, we should be very bullish. Okay. For now, that's all I want to discuss. Thank you for watching and best of luck. Bye.